let's talk about actually what the 9 and 20 is. So 9 and 20 represent 9 period and 20 period when talking about the moving average in technical analysis in stocks. And yeah, I just said a little bit of a jumble of a phrase, but essentially we use these things called technical indicators in stock trading to allow us to conceptualize and gain an idea of, okay, this is a good time to buy, or okay, this is a good time to sell. So the 9 and 20 principle that we're going to be looking at today explores that when you buy a stock and it's above both the 9 period and the 20 period, we're okay to keep holding that stock and riding it up until it breaks the 9 and the 20 period. So that is the simple experiment that we're going to be doing today. Without further ado, let's launch into a video, everyone. Well, in today's video, we're going to be actually talking about where and when to know where a stock's price is going to be at any given moment. Okay, folks, it's not as simple as that. If it were, maybe I wouldn't be making this YouTube video. I'd be traveling somewhere. No, I'm kidding. I love making these YouTube videos, and I'd probably be traveling to Antarctica if I could pick a place. Comment below, like, where would you travel if you could travel to unlimited destinations? No, today's video, we're going to be doing a very specific thing that is a call out from a video that we made a few weeks ago. This was an interview that we dissected and looked at and reacted to. It was like a 3-hour-long video about two guys named Jdun and Stock Market Wolf that are both options traders. And they were talking about their strategies and basically everything. That's what I was talking about. Leaving a lot on the table. That's what I was talking about.
And then I would let the rest ride, which is what I still do. And as soon as after I sell that quarter, I let the rest ride, and I use my indicators. And be specific, I use the 9 and 20 to stay in. And as long as it rides.
Super insightful from guys that are actually like top of their game in stock trading. And of course, this brings you back to my channel. Hello, everyone. My name is Bruce, and I am just learning how to stock trade. I've been trading for about 6 months, and I'm on my way to profitability. It takes time. It takes knowledge. And all of those good things. So we're going to look at a set of indicators that Andrew actually mentioned in the Team Bull Trading podcast, and that would be the 9 and 20. So of course, what Andrew meant by the 9 and 20 was the 9 moving average and the 20 moving average. And that refers to periods. So 9 period moving average and 20 period moving average. And we'll actually launch right into it. I'll actually show you first off the bat what a period even is. So period down here is an interval of time that makes up one candlestick. So if we were to go to the 1 minute, each candlestick on here, if I zoom in really close, that is a period. So the MA5 that I have set up right here is tracking the moving average of the past 5 candles, right? So we've got 1, 2, 3, 4, 5 right there. So let's go to day, and actually this is what we're going to be playing with in our little sandbox here. We're going to be, to go back to the big screen, we're going to be going on a trading simulator that actually lets us go back in time and literally play the market as if like it was happening right now. Of course, today, right now, it's after hours. It's like 5 p.m. So we can't trade live on the market because the market isn't open. But I really like to use this little website called Trading Terminal, which literally allows me to play it on a time basis. So it's like as if I'm trading in the market. I can choose the day. I can choose, okay, I want to start trading here. And then it'll just let the clock run, and it'll actually be that simulated trading of what actually happened on that day, which is pretty neat in my opinion. To set up our 9 and 20, we really got to think. So first things first, let's just think about what we're baseline going to trade here today. So I've pulled up the SPY, right, which is the S&P 500 ETF, basically. And this line represents the start of 2023. So of course, I'm looking at a daily period. So each candlestick is 1 day. So let's zoom it all out right here, and we'll see in 2023. So seriously, from January 1st, 2023, we've been ripping up basically. I mean, we ripped up, we went back down, but we've been ripping up. Let me do Control T here, and let's just get a rough approximation. Yeah, the SPY is up about 11% year to date, which is pretty crazy. Annualized returns for the S&P, you can imagine 8% per year if you're just a plain old investor, not a day trader. Right? Okay. So let us transition to tradingterminal.com, which I really love this this website, and I think a few other YouTubers are behind this website actually, but I just kind of found this one day. Here we go. Stock market replay. So this is where we can actually select time frame. Let's go here. Today is the 30th. Okay, we're looking at the SPY on the 1 minute, and this is the pre-market, the little grayed out area. Let's let the candles load. We'll let the candles load. And let's go up here to studies. And for anyone curious, this is just how you do all of this. You know, when I first started trading, a big part of it was like, I don't even know what to do. I don't even know, like, how do I even get education? That's another big part of this channel, is just figuring out and showing you all out there, like, hey, here's how you do this certain thing. And I really implore you to try this website out on your own. After you watch this video, we're going to be going through those indicators. So let's first go to moving average. Let's select moving average 20. We'll remove the MACD. And let's select the moving average 9, right? So we've got the 9 and the 20 right there. And let's configure them. So let's make the 9. Oh, what color should we make the 9? You know what? Let's make it let's make it light green. There we go. And then sorry, I messed up there. Let me go back to the 20, and let's make the 20. Let's make the 20 a blue color. So we've got 20 is the blue. And here we are. We've got the lines. Is there some way to make them thicker? Let's just see here. Yeah, I think there's a way to make it thicker. So let's make it 2. There we go. That's better. You know what? Let's even make it a little bit more pronounced. Let's just make it 5. So 20 is weighted 5. And let's make this weighted 3. So this is the 9, and then this is the 20, right? Let's get going, and our premise is very simple today. We're just going to wait until the stock goes above the 9 and the 20, and then we're going to let it ride there as it's above, and then we're going to see how effective it is to sell the position when it crosses the 9 or the 20 again. So basically, if the stock price is above both the 9 line and the 20 line, then we're not going to sell, because that's supposedly an indicator for us that we can keep holding the stock. So let's add on to our position here, and let me switch my camera. Okay, so you can see my positions in the window right here. So let's prepare our first buy of 100 shares. We see that it just crossed the 9, but I want to see it cross the 20 to get a little bit of confirmation. It should be above both the 9 and the 20. That's what should happen here, in theory. So we're sitting at real time. You know, simulated time, it's about 9:31. Oh, and there we go. We're going to buy 200 shares. I meant to only buy 100, but I got a little trigger happy there. But anyway, we bought 200 shares. We are getting rejected. We got rejected very hard. We shouldn't have bought 200. We are getting just destroyed. Super hard rejected. Okay, it's not going our way. I love this. It's live. It's authentic. I'm filming the video. I'm not really cutting it at all, except for like places where I pause and sound dumb. So yeah, this is it. This is me trying the 9 and 20. I'm going to buy it when it goes above the 9 and 20. and I'm going to sell it theoretically when it goes below. But essentially, we've just been super rejected. So let's just, you know what? I don't even know how far this is going to go. Let's just sell out of it. And look, we keep pushing downwards. We keep pushing down. So, and this was today, but I wasn't tracking the SPY, so I don't really know what was happening. I try to make this as authentic as possible. Like, I don't know where the stock's going to go. So we see that it's like coming back to the 9 and 20. We do have a realized P&L of negative $78, which, you know, I don't know. So let's see if, let's try to buy 100 when it crosses the 9 line, and let's buy another 100 when it crosses the 20 line. Let's try that experiment out. Let's see how we're doing here. And once again, we are playing it at 1 speed. You can see there the little 1x, and we can change it if we want. 1x, 2x, 5x. Okay, so we crossed the green. We're going to buy 100 shares. Look, we bought right at the green, basically. We bought right at the green. Isn't that cool? So we are about 3 minutes into market, and oh, we hit the purple. So we're going to buy again. We're going to buy again. So, and strongly rejected at the 20. Strongly rejected. Okay, so we're going back to the 20. We're going back to the 20. So let's see if we can have the stock price go a little bit above the 20. And then we can see if this floats. Maybe I entered just too soon. Maybe that's why. You know, 9:33. So let's speed this up. Let's time travel a little bit. We're going to go 2x for a little bit. So the gist is, you know, not to sell. I'm going to buy again just for fun. The gist is not to sell until, you know, the stock price comes back down to the 9 and 20 period. This is the whole thesis. And see, we're there. We're forming higher highs. I mean, the stock price really jumps around like at the pre-market, and the fact that I'm 2xing the speed is pretty remarkable here. So let me 1x the speed again, and let me just get this out. It looks like we're about to touch the 20 period line. If we do touch that 20 period, our theory, I guess, would tell us we have to sell. So let's say that our total allotted, you know, share count is 1,000 shares of SPY, and we've just bought 300, so we're in at 30% of our portfolio, which is a good, you know, comfy amount to be in. So let's just see where this goes. Price is leveling out a little bit. Oh, we hit it. We touched it. Okay, I sold out of it. Does look like it wants to go above, though. At the sign of an up candle, we're going to go back in with our 30% after the strong rejection. Look at this. This is a huge wick. That's a huge wick down. Wow, that's crazy. So we'll wait for the next minute, and that's where we're going to get our new candle. And if the candle is positive, we're going to buy back in, baby. Oh, these prices look too good to be true. Oh, too good to be true, these prices. Look at this. I'm going to buy 100 just to get in here. It's juicy. All right, I bought 200 more, so I'm in at 300 shares. Strongly rejected. We got messed up. We got wrecked. This is the problem. Oof. Strongly rejected. This is terrible. Well, this isn't really going to make for a good video, is it? It's like everything I try to do, we just get destroyed here. Look at this. Look at this. Okay. You know what we're going to do? We're going to simulate doing a revenge trade where we're going to buy more. So let's bring it up to 50% of our portfolio. Oh, I accidentally bought one more. So we're up at 60% of our portfolio in on this trade. Getting a call. Can't take that right now. We're just going to follow this out. And we are approaching like 20 minutes on this video. So let me 5x speed that and see if we go above the 9 and 20 again. So, as this thing is ripping, hopefully we are going to see, nope, we're getting rejected again. We're going to see if, if this ends up not being a failure, this whole video. You know what? If it's a failure, I don't care. I'm still posting it. I'll post another one where hopefully it's not a failure. Ooh, look at that red candle. We just got smoked at every turn. At every turn, we've been getting smoked. This is terrible. Oh my gosh. What? There we go. We hit the 9. We hit the 9 period. Are we going for the 20? 20. We hit the 20. Yes. Okay. And deeply rejected right after we hit the 20. We are back in the red. Negative $50. Okay. Well, this is extravagant, huh? Okay. It's really, there's a lot of wick there. Isn't that crazy? There's like no body on these candles at all. It's very uncertain. The market is very uncertain where it wants to go. So, you know what? We are at 19 minutes in the video. I'm going to 10x speed. What just happened? Oh, the red candle was so deep that it shut my monitor off for a second. At every turn, you know what? We are diamond handing this thing. We're diamond handing this thing to see if it's going to work out for us in the end. And buddy, I do not think that it's going to work out for us in the end because we have just been getting smoked. Oh, we hit the 9. We hit the 9. We hit the 9. Give me 20. Give me 20. Come on. Give me, oh, reject. Give me 20. Come on. Give me the 20. Give me the 20 line. Come on. Hit the 20. Come on. Buddy. You can do it. Yes, it hit the 20. Okay. Amazing. And rejected instantly. What the heck? So it's like the 20 line is acting as a resistance. I thought it would be acting as a bellwether for like, oh, there's a reversal happening. This was my conclusion that I drew about what I think's going to happen when it hits the 20. That, okay, it hits the 20, it means it's going to reverse. But no, in fact, when it hits the 20, it just means that that's the resistance point, and that's when I should sell. So it's almost as if, like, this is ending up to be a very bearish day. We're in the first half hour of the market, and it's ending up to be very bearish. So I'm curious, if it's a bearish day, maybe we attack the 9 and the 20 inverse, and we short the market. If it's a bullish day, which means that the stocks are going up, then, and we hit the 9, well, if it's a bullish day, what I'm theorizing is, okay, maybe it'd be good to try this like long strategy, but since it's obviously just selling off today, I mean, oh my gosh, look at that. Look at us. Hey, okay, so we revenge traded. We're now in at 600 shares. We're down $880. Isn't that terrible? That is insane. Can this thing like 100x speed? Because that's just crazy. So the 9 and the 20 are just plummeting along with it. Okay, so let's wrap up the video. This plan did not... Oh, we hit the 9. Rejected the 20 again. Jeez Louise. Okay, so let's say that we're not going to, We're not going to take the bag. We're going to just keep holding. It's 10:09. Let's skip ahead to 10:20. Okay, look. Reversal of the 9 and 20. Reversal of the 9 and 20. Look at that. Isn't that cool? So the 9 and the 20 crossed. And now we are significantly above the 20 period. But we are still about pretty darn negative 100 on our negative 300. And negative 400 on negative 5. Negative 5. I cannot believe this. Anyway, let's keep going. This was a fun experiment. Let's keep tracking it. I think we're just going to be down in the dumps all day today. So if we would have held, I just saw we were down $1,300 at that dip. Look at this. I mean, we did not do well at all. So like at this point, you know, we would have stopped out. Say the maximum I want to lose is $200. I would have stopped out and I would have stopped playing. I would have, you know, reevaluated. Obviously, I would understand that this is a bullish, or I'm sorry, that this is a bearish, you know, day that we're having here today. So let me skip ahead. Oh, wow, huge reversal. That was crazy. We're still down $950. We're leveling off. We're $1,000 in the red now. And then we'll go in post market. So the end of the market, we lost $1,200. How's that sound? Okay, so anyway, this was a fun video. If you enjoyed the video, leave a comment below and tell me, like, you know, what's something new that I should try, or tell me if you've tried this app, this website. This was really cool today. I only did one experiment on that 9 and 20. From my understanding, if it stays above the 9 and 20, it's a clear sign that, oh, the trend is bullish. So inversely, if it stays below the 9 and 20 like it was half the video we were watching, then it's bearish, which means we should be short. And we should treat, we shouldn't treat it as a crossover, meaning it's an inversion in the pattern, but we should actually treat it as if it's a resistant point for the stock. So yeah, I thought that was interesting insight. But stay tuned. We'll keep with these videos all day long. Have a good one. Bye.